Good afternoon. This is the Eye of the Storm podcast with the Elliott Wave Weekly Update for gold, silver, and platinum being recorded on Sunday, November the 30th at 1:06 p.m. Pacific Standard Time. I am going to start on gold, but I just want to take a quick review. I have made a labeling change in gold, and I'll explain that in a moment. Silver on a tear again, making new all-time highs again, and still projecting that it will go higher before all is said and done with silver. Platinum, I've made a degree change and a labeling change. And now all three, gold, silver, and platinum, are continuing to move to the upside within not similar, but alike counts that still project to higher levels. I had thought platinum was done and was now getting ready to seasonally go down as it normally does. But I don't think, and I'll show you that change as well. Beginning with gold here on the monthly chart, I had to come out this far to show you that change. I had placed this minor third wave up top here, which would have put us in a minor fourth wave correction. And being that gold has also now turned higher and is closer to its all-time high than to a low that would be expected from a minor fourth wave, I've made a degree change. So I'm placing gold within the minor fifth wave going up, not having just completed the third. And the reason that I'm doing that, number one, is that, as I've discussed several times before, it is in a fifth wave that the precious metals, and particularly gold and silver, it is within that fifth wave that we get that super extension and the parabolic type moves. So before I had it listed in the third, and I thought, well, it still could work in the third because the third can do that. But the most common for gold and silver is a fifth wave. So I switched it. I went 1, 2, 3, 4, minor four. We're in minor wave 5. And within minor 5, we're getting ready to kind of put in the minute fifth wave up, which will then complete the minor fifth wave. And that then will complete the intermediate third wave. So we are making progress in terms of this larger count and the fact that where gold can be going, which I think is 5,000 and beyond. Let's kind of go bring this down a little bit and we'll take a look. Taking a look here on the 5-year weekly chart, there is minor 4. So now we can start to break down and look inside this whole minor fifth wave, which is going to consist of 5 waves of minute degree, of which 1, 2, 3, and 4 are complete. We're inside minute wave 5 of minor 5. So within that, we're going to see 5 waves of minuet degree to complete this minute fifth wave, of which we have 1, 2, 3, and 4. Now this is the change that I thought initially that this was going to be wave A and that we're doing a B and that we're going to turn and come back down. But the market is holding higher and not giving any real signals unless we walk in later today and then tomorrow and see that we have now dropped below 4,000 again. And I'm not seeing that. So I'm going to bring it down out of there and we can start going over a little bit more and come down to the daily. Now there on the daily, we can see there's 1, 2, 3, 4. So before, again, I listed this as A and this was B. Coming down in terms of that larger fourth wave. And that would have been 1 and this would have been 2 until 2 went up and broke above wave 1. So again, it worked in the other direction where we have 1 and then we had 2 and now we're coming back up in a third instead of A, B, 1, 2. So now that's the 4 and here's wave 1 of minuet wave 5. Here's wave 2 of minuet wave 5 and here's 1, 2, 3 of what I think is going to turn into this third wave. So here are our markers for this third wave. Wave 3 would be equal to wave 1 at 43.43. I'm going to round it up, 43.43. Wave 3 would be 1.618 times the length of wave 1 at 45.58. The minute fifth wave would be 2.618 of minute wave 5, would be 2.618 times the length of minute wave 1 at 45.27. I don't think that's going to contain it, being that we're in 3-4 and we're just building within this fifth wave. And again, here we are again in another fifth wave. Can we start to think that we might get some running to the upside, some parabolic moves type to the upside? Yeah, we probably can. And they can start within this third wave. So let's kind of bring this down a little bit more. And I'm going to go down to my hourly here. And now we'll see, we can break this down. And I just need to put one little change in there and get it up there. Yep. And get this one over here. There we go. Now we're better. I am a stickler for putting it right on that point. So I'm just going to put these together. So they're a little bit over. So here we have one, not the prettiest one, but still one, ABC 2, and then 1, 2, 1, 2, 3, 4, 5 of 3, 4, and then we're working on this 5 of 5 of 3. And again, I think we can really start to continue to build on this. And sometimes I can go down and we take a look at this on the line chart and see what it looks like. See, that could be 1, that's 2, and then we have 1, 2, and 3, 4, and now we're building again in a fifth, unless we put it there, and then, yeah, it's just not really coming out any other way other than there's got a lot more upside to do. So I think we got 43, 43, and then beyond. Because what I can also say, this is 1 of 3, 2 of 3, 3 of 3, and it's all working to just be wave 1 of 3. There are other ways we can break this down and just to really produce the intensity of the move. Now, I think we could really start to bolster this whole thing once the market starts to break out above that level, which we have, and then again above 4,300, which I think is up next. So, and that's in that style. And if I just kind of take it back out to that daily, we have additional, so we have 45.58, and then we have coming up here 4.236 for this fifth wave, which should be next up, by the way, and that's at 48.63. And then here for this third wave, 2.618, which is not that uncommon, is 49.07. So I think we are definitively heading higher and are likely going to be touching 5,000 before all is said and done within this move to finish this minor fifth wave and to finish this minute fifth wave and to finish this minuet fifth wave. I think we're going to be closer to 5,000, which sits there for the minor. That's a pretty high level, but that's because we've been going through them all. And yes, this is just a multiplication. It's 11.089. And here, because it's going to be 1,108.9. So it's pretty big number. But that's at 51.98. And so that also suggests, as I have discussed previously, it's not something that the market needs to go there, but it is within the Fibonacci sequence. It's this Fibonacci level that's where some additional resistance on a minor degree should find resistance here. And outside of that, I also have for the minute fifth wave, 4.236, which again, once we break 2.618, which is coming up, that's our next level there, which is 52.90. Does that mean that that's where it has to go? No. I think that 5,000 may not present the strongest wall of resistance, but I think there will be some there. And I do think it's like the market's going to attempt to go test it out. Because each time it gets up to a big round number, it can test it to see what's sitting on the other side. That's just kind of the nature of trading. So I wouldn't surprise me. So I'm believing that 5,000 on this particular run can be it can be tested, if not broken. And I think if we start breaking these higher levels, it could force just this parabolic type move because, for all kinds of reasons, to be honest with you. We have, the market's going to get thin. The market's never been up here. Who's going to short it or sell it when we're in a runaway rally? And what could be forcing it is the fact that the shorts have to be covered. And, because I think it gets more difficult, like in anything, when you short something in the market, there has to be, your clearing firm has to go out and borrow whatever it is. Because if you had to provide, you're shorting it and you're selling it to somebody, and they come to collect, they're going to now say, yeah, I'm going to exercise my right to pick that up at 5,000, which means that the things are going to have to go over 5,000 in order for that to happen. But if it does, your clearing firm has to be able to provide that to them. 100 troy ounces of gold at $5,000 an ounce. It's a lot of money. So what can happen is that if it should come down to that, then either there's going to be a margin call or they're not going to allow the trade. So if you're not able to sell it, then you have to sell it because you already own it. And if that's the case, particularly in here, they may choose that they're not going to. So if the need comes where somebody needs to buy, it could get ugly real fast. And what I mean by that is suddenly we're just jumping, because there is somebody or something or some firm that must have these, cover something in these futures. And that could also be coming and being driven by GLD, which has options. Gold does as well, GC has as well. But it is GLD that where the majority of the options are trading. And so same thing there. We're finding that lately in silver's been hard to borrow. So has gold. And so when that continues to be a problem, shorting something or having to sell something without something sitting underneath it that you're hedging with becomes very difficult to do. So again, I think that also can contribute to some of the powering up that we're seeing in gold and silver, and for that matter, in platinum as well. So these are all the zones coming all the way up to 52, almost 5,300. And so again, I'm going to bring this back out to my maximum. Actually, I just need that 5-year. Here, good enough. And so again, what I'm looking at finishing is this minor fifth wave, but before the minute fifth wave and now the minuet fifth wave. So that's the one I'm looking for, that minuet fifth wave. And I've got 1, 2, maybe 3 coming up, and then a 4 and a 5 to put it all the way up. So once I can get that in, or basically even the sub-minuet wave 5 in, and then minuet wave 5, and the minute wave 5, and the minor wave 5, then I'm putting in the larger picture, intermediate wave 3. Intermediate wave 3 should, I keep talking about it, and what I'm making reference to is that once we start reaching these higher levels, particularly intermediate degree of that third, I'm looking for a larger pullback. I'm looking for the market to pull back way more than it has. And that would be just because on the Elliott basis, it is making that suggestion. So if I'm here and I've got to go back to the fourth wave of 1 lesser degree, I'm going to show you where it is. If we're up on an intermediate wave 3 and we're coming back down, that minor wave 4 is the fourth wave of 1 lesser degree. And here it sits at 1613. Take it back out to here, and you can see the window is from 2076 down to 1600. That's the window for the minor fourth wave. Now, for following Elliott, do I really do would I think that it can get back there? Well, then I have to go back to what happened in like 2011 when we ran up to new all-time highs. So we reached at that time, we reached 19,000, almost 1924, and we dropped back to 1,050. So if we're going to get upwards of 5,000 or 4,900 up into those zones, is the reality that we might be able to get ourselves back to between 2,000 and 1,600? I have to say yes on an Elliott basis. What's going to drive it? Well, I think there's a lot of things that could drive it, but right now they're not apparent, and the case for the parabolic move to continue continues to have some weight. So, if you're trading gold, if you're long gold, great. I believe this is going to continue. And so here we have 43.43. That's 100%. I'm looking for more. It's a third, and it's a third within a fifth. And so we start to extend yet again. And then so I think this level, 45.27 to 45.58, 59, that is, I think, going to come into the picture. And that's just going to finish this minuet, sub-minuet wave 3. And then we're going to get a 4, and then we're going to 5, and we're going to end up, folks, I think somewhere up in here to 5,000. And we're so close once we're up there. And I think that's when we'll be finishing up the 3 here, 4, and a 5 to finish this sub-minuet wave 5. And let me just take this back out a little bit. And then once we're done with that, we're finishing the minute wave 5. And then on top of that, then it's the minor wave, the minuet wave 5, the minute wave 5, and the minor wave 5. So a lot can finish soon as long as we get all this together. And can it happen time-wise? It gets a little bit tricky, but we got December. We got a lot of stuff going on. There's a lot of things that could disrupt the economy, to just all kinds of things being tossed around that could throw uncertainty out there. The one thing gold traders don't really like, and we find that there's this run to safety. So, being that gold continues to be a storehouse of value, capital gets put into gold. And that, because if you're going to find sellers, it might be more difficult to come around and to just go selling gold unless you have it and you're taking profit, or you've got long calls sitting underneath it and you can sell it because it would be considered a hedge trade. Okay, now enough with gold. So I have still some pretty good feelings for gold right now, that I believe we are going to continue higher. You can see it does appear to be starting. So first up the gate, 43.43. Second up the gate, 45.27 to 45.58. And I think that's where we finish this third. We come back in a 4. We go back up in a 5 and finish this 5 and this 5 and the minor 5 and the intermediate third. And then we'll see about this correction. All right, over in silver. Silver was what kind of got me to change the labeling that I had on gold. Now here we are. I'm just going to get that down there like that. So we have the WX and we're still in this Y wave. Here again, you're seeing in that minor fifth wave, just this parabolic move, which has truly, truly been nonstop. Look at this one for the month of November, which is over today. So we can take it from there to there. That's going to be, because it come tomorrow, we'll be in December. So in the month of November, the market, the low was 46.52, the high was 57.85, 57.85, and that was on Friday. That was on Friday that it got up there. So actually, the high was 57.24. Um, and it was amazing to watch because it did it under decent volume and it just went. And I think a lot of it was in options. It was in the silver options. And again, being that silver is hard to borrow, if they had to and they knew they were going to need to deliver, I had to go get it first. And that, I think, created more volatility and pushed prices even to a further extreme. Now, with all of that in mind, I don't think I'm going to start bringing it down because here, let's just say what we're finishing. We have this intermediate C wave. It projects right now up to 65.24. That's where its next fib resistance is going to come in. At the 1.618, we've already blown through that. So the next up is 2.618. That's at 65.24. Now, even prior to this, I had felt that 65 was probably a probable target. How the market was going to get there, I thought, well, it's got to get through 56, then it's got to get through 57. Well, it's doing that. So I think as we proceed to go up in this fifth wave, if it's going to continue, because I have those, the next for the minute wave 5 is 62.50. So, but here I have 1, 2, and now I think part of this, let me get out of this monthly chart. 1, 2, so here we are in the third. And if I really have to say, where can this third go? I can go this way. Did I do it that way? I'm wondering what this was. Hold on a second. I gotta check this one out. This guy. Yeah, let's edit these properties, see what it is. 4803, 5337, 53. Okay, I gotta take that one down. I'm gonna redo this one. Remove that, and I'm gonna go from here to the top of 1 to the bottom of 2, and it changes it around just a little bit. And it's going to be in this color, and I'm going to put it like so. Here, and put it up like so. And we're just going to start coming down. And we can always take it right to that 100 equal, and then we have 1.618, 2.618, and 4.23. So I'm leaving them all there. Okay, so let's put another look at it. So we're up to 57.24. Okay, that was on Friday. That just surpassed the 100% marker for wave 3 of minute wave 5. So there's 1, there's 2, wave 3. Well, we already knew there was going to have to go more than, and it did just by a little bit. Let's just see what comes up next. Our next one up, look at that. So even though I would think we're going to find some resistance at 58, we should find some resistance at 59, 58, 50, etc. Fib-wise, it's not showing. Unless I start really breaking this down. And let me take it to the daily. I mean, I can start to really see if I can get inside this thing. Let me take it to the hourly. And here we are inside the hourly. So there's wave 2. Wow, this is a mess. All right, so now let's go here. Just activate it. Let me get that over to there. Let me get this over to here. Much better. Same diff. Okay, so we can have 1, 2, 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3. So if it is, maybe we get a little bit more and then we pull back. And where's that previous fourth? Well, I don't know. You know, it's going to be a little bit difficult to go and try to find it, but it's in there. And we could start to do 1, 2, 1, 2, 3, 4, 5 of 3. If it is, we can run that from here. We can go from there to there, and we're going to get where our pullback should be. But I'm not sure because we have to really pin it to where the market is at the time. But if we're just taking a guess now while the market is closed, and I would kind of say that our chances are, 54, 54.22, 54.25, from wherever it gets to. If it stops from here, we put the three there and it comes tumbling back down. Well, our first marker is 55.38, 50, yeah, 55.40, I'm going to call it. So, and they've been coming in light. They have been coming in light. I will say that in terms of they've not been going like on a fourth wave. 0382 is the most common. They've been coming in higher all the way through all of this. So the underlying strength in this market is still very real and very strong. So for whatever the reason is, it's very real and it's very strong right now. Now, normally in silver, if we're going to get a turn, we're looking for something that's going to go boom. They're just going to hit it and knock it back down. And I think that would be the dealers just standing back going like, we're going to cover, but you're going to have to come down here. And sometimes they do. But I'm feeling pretty strong with silver. But I also think at the same time that silver's kind of in some finishing mode here. We can see now that we seem to have lost a lot of resistance between 57.50 or 57.25 and 62. So again, never being here, we really don't have any, and I'd have to create it on a fib basis for what I have to build from inside of all of this. So that's what can really force the market to just fly, as we saw here. There aren't many points in this whole thing where we can say, oh yeah, the market's been there, that should provide additional resistance. So the market's been there, so we're looking for support. Once we start getting up here, it's where it prints that gets to be put into the formula, gets to be put out there and say what's going to be resistance, what's going to be support. I mean, we could say right now that 57.08, depending on where they're going to open it today, would be resistance. I don't know. We'll have to wait and see. But I think we have a very strong chance of getting between 62 and 65. This is the minor, and that's all the way at 66. This is the intermediate. That's the one that's next up to complete. And that would be in silver. Let me just double check before I open my mouth. It's a C wave. So it's actually, now here's the other thing. If we finish this C wave and it's going to come up here at 65, oh, it's a beauty, number one. So let me open this back down and get it back over here. 65 is a beauty because that would be a C wave. That would also be the completion point for wave A. Excuse me, wave Y. How did it come up with A? I don't know. But it would be wave Y, right? Because we're in a W, X, A, B, C, Y, and there's the Y. And we're just in the stem. And it would be so conclusive because this is the fifth wave. We're in another fifth wave. And if we get up here to get pitched in the third, it could go straight there. Simply just on the power of these fifth waves. So again, another reason. Precious metals, particularly gold and silver, they expand and they go parabolic either direction, usually within a fifth wave. Well, here we got the minor fifth, and then we got the minute fifth, and we're getting ready to add the minuet fifth as well. That to me is like, wow, pretty incredible to get this all the way up to there. It really could, folks. And then once we receive that, this is where I would, the turns, because you got these here, right? We have all of these big moves, how far the market just went. I mean, I can go like this and we can say, well, let's just look at it that. We had one just 2 months, but look at that month. That was in January of 1980. And we're talking $20, $20 low to high. That's a lot for silver. Now, I'm going to go back out here. And let me get that back out. Oh, come on. Let's try that again. And let's go back over here to this monthly maximum. And so what we're getting at here is that if I had to put this is on my monthly chart, and I'm looking at all of this, well, we've got all that's all one fifth wave. There's not been and this is the monthly, there's not been a sizable pullback from or since April of this year. April, that month of April. So, and that was a 4. So this 5 has been just driving higher without any real pullbacks. I mean, that was a small one. That was a small one. And you see it just didn't stay red for very long. Right back on the horse and just kept going. So it's pretty wild. It truly is pretty wild, folks. I'm going to get down to that monthly, bring it back to that daily. And so we're going to go inside here. So we have the 1 and then the 2. So we do have pullbacks. We have to come down to the daily chart to find them. But I think overall, it could just really go. It could really just kind of go. And we keep breaking to new highs. So I think next stop truly, maybe not next week, maybe the week after, I'm not really sure, 62 to 65. This is where I'm going to be looking. It's going to be completing the C wave. And on top of that, we're going to put a wave Y. So what would be expected? That was what I was going to talk about. What would be expected once this Y wave was finished? A massive turn. These are all spent months going up, and then it didn't take them very long to get all the way back down. Here the same. Took them 1, 2, 3 months to get up there almost, and then it took 1, 2, rallied a little bit, and then dropped. And it doesn't take very long for them to get down to these lows. Like here, this was January of 1980. This low was 1982. So 2 years to get down from 50 to get it back to 6. Wow. No, excuse me, $5. And this one was 49.65, I think, something like that. No, 49.82. And there was its initial low was at 13, but ultimately it went down to 11. And that was 2020. That was pandemic low. And then this is what it's building on. Beautiful Y wave, by the way. Everything kind of fits. So I'm still pretty optimistic that silver, and we're now closing in on it. So, it's like, okay, what do we do now? Well, if you're long and you've been waiting for this, well, you might want to consider an exit strategy and just putting it together. Or you can continue to ride it, but just keep a stop in place, because my feeling is, and it's going to remain, because that's what it's done in the past, is that when this thing is ready to go, it's going to go. It's going to turn and just go. And I think it'd be like day after day after day, it just goes. So whatever the reason that it was going up may finish, may be done, maybe become obvious. And then everyone's going to want to get out. If you're sitting long, you're going to want to get out. And that's going to cost the next move. Now, I am also not saying that after the Y wave is done, that's all we're going to get. I actually think we can have more. This is a W, this is an X, this is the Y. We do another X wave down, and then we do another Z, possibly. We just do a Z wave. And so it's going to be, oops, I didn't mean that. It's just going to be Z, a big Z. And so we're going to wait and see. This is all going to get very interesting. But we could just do an X wave and do another Z wave, and then switch and do another sequence, a larger sequence on our monthly. But I'm going to try to follow this pattern, which is WXY. So we get another X wave, and then we can have a Z wave. Or it could be WXY, and then we break and we drop into a 5 wave sequence. All right, that's silver. Kind of exciting because I've kind of followed this through, and we've not given up these upper levels yet. We've just not said that's it. Can't go any further. It continues to build and continues to now just make good on the threat we're going to higher. I know from reading, and I get reports through other people, that where, the fact is that there are silver. I mean, I might have some on there. Got to really put it down. Yeah, there they are. There are fib levels, folks. They take this thing all the way up. I got them up to 94. I know people have talked about $100 silver. Is it possible? Yeah, of course it's possible. Is it a realistic possibility? At this juncture, I don't know. Who am I to make that? Everything's just supply and demand here. And there are industrial users within silver. There are pro users and so people that deal, it's part of their product. So they're always going to have an interest in silver. And now it's become investment grade. It's like people are going to want it because they're going to hold on to it because, well, it can go to 200, it could go to 300. It's like, sure. No one thought that gold could get to 3,000. No one thought that gold would get to 4,000. Now gold's knocking on 4,500's door, and 5,000 is just a tick above. Truly. So again, capability, yeah, it's there. And again, the one I'm going to say is like, as long as the money's going to continue to trade in this product, I don't see the bottom falling out. I see it continuing to build. It should correct, but to have a strong connection or strong correction, we're going to need to have something that has gotten inside this market to reveal why it was being held higher, and that's now been squashed. That would drop that. That would say no more rally. If something's going to change about the dynamic or the givens in silver or gold to kill the rally, it's going to have to be pretty strong. Am I saying, though, it can't happen? I am not. But if there are defined reasons why silver is going to keep on going, if those reasons change, if those reasons are fulfilled, then yes, we could get a big turn. And yes, I do believe that the market will correct, and it'll be a large correction. No matter how high I get on this thing, when we're talking about it, it's like, well, that's a big high. Yes, we're going to correct. I believe coming out of this, it's going to be another X wave. That'll be to the downside. This one we saw, it took it from 48.19, and what was it? Let me just see. 49.82, and it brought it down to that low, which was 11.64. So this was 2011. So it took 9 years. This is 2020. So here we are in 2025, knocking on the door of 2026, and it might be up to there. Could be this year, could be next. But then are we looking at 10 years? So the same thing. We're staring down the face or down the throat of a major correction in the equity markets. It just kind of tells me about value. And that's really where I think the correction is going to come in, that things have just gotten so overvalued. So you're going to want to have a storehouse of value. You're going to want to have something that will continue to hold its value while other things could go, I hate to say this, but to zero. So the thing is, it's like, it's a commodity, it's a precious metal. And what gives it true strength and short, it's just a short squeeze, is the fact that there's a limited supply. And it has to be taken out of the ground, and that costs money, and that has to be refined, and that costs money. That's both gold and silver. Anything that comes out of the ground has to be mined, has to be refined, and then sent out to market. So again, if we start to collapse in price, the miners are not going to go whole hog to go start mining tons of silver because their cost will not be met. Right now it could, right? They're all making great money if you can get it up out of the ground and get it refined and put into market. Same with gold. All right, let's go over and take a look at platinum. Platinum, wonderful thing. I had marked this as the completion point, this high right there, as a completion point for intermediate wave C. So first of all, minor wave 5, intermediate wave C, and primary wave B. And I'm going to bring it down quickly because we need to really look at this a little bit more here. And here's why I had to change it. If that was that finishing all the way up there, this rally last week was tremendous. We finished up at the highs, 1680, almost 1684. In fact, we did get, what was the high? 1695, almost 1696. This high was 1770. Well, if I move that to 3, this turns into 4 because it is, right? It did come down ABC and a small failure on that C-way before we just really rallied. And platinum rallied close to $100 on Friday. Either it was Friday or hold on. Let me see. That was on Friday. It rallied very strong. So I revised it, put the minor 3 up at the top, which is, it fits. Before it was here, and that was the 4, and this was all the 5, and then we were working our way back lower. Seasonally, it should also go lower. That didn't happen. So it goes 1, 2, and then 1, 2, 3, 4, and this is all a 5, a 3. Put the 3 there. A, B, C, and not in a huge failure, but in a failure. They put our fibs up there. That's where the minor wave 4 now becomes. And it does project a 1.618, the rally, by the way, 1.618 for wave 5. It's already 1.618 times the length of wave 1. 2.618 times the length of wave 1 is 1813 or 1815 or wherever it's going to get to when it gets up there. And that gives us the new high. Could be that low. And I'm going to take this out. If we want to go pull it back, I can't. I got to go all the way out to my monthly maximum. And I got to go all the way back here to see 2011, good old 2011. That's when things really were spiking. Gold spiked, silver spiked, all in 2011. Here, this market reached 1918 in 2011. If we're going to challenge that high or better that high, well, 1918, right there. Not all that much above 1813. So, and I think, let's just see. Our next one would be 4.236, 2000. And folks, this is all possible. Now, when's the last time I got up there? Well, in 2008, just before the great financial collapse, platinum was touching 2308. And then it nosedived. And this is what I'm talking about, disappointment. 2308 in March of 2008. In October of 2008, traded to a low of 751. I think we could get something like that again. This is what I'm talking about when things get so pushed all the way up there that when it's done, whatever the reason was gets canceled, gets brought to light, or whatever happens, bam, massive flow out. And we start again. Massive flow out. This was the pandemic, but it was a massive flow out. Why? Because capital was needed. Same, I don't know what was happening. 2008, 2009, we know it was the great financial collapse. What are we kind of coming into? Let's talk about economy, right? These all things are good. They're not resistant, economically resistant to big changes. Do we think we got some big changes coming up? I do. And we have a whole bunch of things that could do it. And they could be very, very serious. And they could drive the market, equities, and then some into a longer term correction of a much larger degree. So again, what am I still looking to finish up here? That C wave and the primary wave B. That puts us in a primary C wave down. Yikes. There's the A wave. If we're going to go back up here, I'm going to be looking for that C wave to come down below the A wave, which is 562 in 2020. So we're looking for a return to the 2020 low. And when we're all done here and we turn and we come down, whether it's going to be from 1800, 1900, or 2000, we're looking for a move of $1,500 possible. And we're getting ready to kind of go into some other seasonality here within. And that'd be worth checking. I mean, you just have to Google it or run it through your AI platinum seasonality, see what it tells you. In fact, you can do seasonality in silver, you can do seasonality in gold as well. These are all important. These are the things you want to grab a hold of. If you're going to go in and trade this, know the product. All right. And I'm going to be actually doing the same. It'll be part of my year-end updates. And we're getting tomorrow's December 1st, good as time as any. But I'm going to kind of wrap it up right here. So I'm still looking for additional new highs again here. This is where I had to make my change. I had put this as all the way up to that primary B wave, which put us in a much stronger downside that should not have included what this did in here. Now, can it actually be A, B, A, B, C, A, right? Because we have an A, B, C, B. Is this a C wave? Is it doing another triangle pattern? Not when it does that. So I ran through the gamut of what I thought, and I'm going to let the market. So I'm keeping open in here. I'm seeing what can happen, but that's how I'm marking it right now to 4, and we're just going to keep going. And I think we go to a new high, at least above there. And for all I know, we can do it tomorrow. We're up 100. We're up close to 100 on Friday. If we're up another 100, we're going to be up here. Okay. That's going to be it for today. And thank you very much for listening, for watching. And hopefully you all had a really great Thanksgiving. You're all very excited and raring to get back into the markets come tomorrow. And the next update in the precious metals will be next week.